Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rocket Lab, ticker symbol RKLB. And so I wanted to do a follow-up on the video that I put out earlier this week, the Rough Cuts request, which went over Rocket Lab before earnings, which was reported, let's see, on February 27th. In the after hours, I believe. I was not able to stream it. And just want to go over what happened following earnings and some key levels that were hit. I'm pretty proud of myself for calling out one of them, specifically this yellow 786 level here at $4.14.9 or $4.15. As you can see, that was hit on February 28th. And so that does seem like it was a pretty good dip buying opportunity. And I also do want to note that I am recording this on Friday, March 1st during market hours, and the current price is right around $4.63. So we'll have to see where it closes today, where it closes the week. But I do think things are looking pretty good for the stock. And so, I just wanted to go over kind of my perspective on this. And also, I do want to thank all of you for the engagement around Rocket Labs. It's been really nice exchanging with you guys. And I'm just really excited about the stock moving forward. But so here, looking at the level. So in the video I put out earlier this week, I did include this Fibonacci retracement that not only included this 786 here at $4.15, but also this 618 here right around $4.35. And as we can see, there are a number of levels there. Not only this uptrending white line, also this thicker yellow line that I have drawn corresponding to the low here before this gap up. And also from this new Fibonacci retracement that I've done, coming from the high that was hit on February 20th down to the low that we saw following the earnings report. That was on February 28th, being at a price of $4.11. So from that retracement, the 236 level is at $4.34.4. So right around that $4.34-35 level, there are just so many levels there. That seems like it is a very important level, and it does look like it has acted as support, getting this wick lower than that level, hitting a low of $4.11. That seems like we're putting in a bottoming signal with this big wick down. Buyers are stepping in below 435, really, below the open of the day, which was $4.42, right around here. Buyers are stepping in. We don't want to see the price go lower than $4.35, and that is evident with this big wick or tail coming down from the candle here, and then also getting a close on that day, the 28th, not only above the 382 here at a price of $4.48.8, right around $4.50, also corresponding with the 50% retracement from the way up here at $4.49.5. So $4.50 makes sense. That's a key level. $4, 2/4. I like it. And then also we do have this blue line here, which was the gap on the way up, the high before, creating this gap. And so all of those levels there, it does seem like that is the Fibonacci level that is acting as support currently. $4.50 right around there, getting multiple wicks down. A wick down yesterday on February 29th, hitting a low on the day of $4.49, but then closing, while red on the day being down really just, 0.11 cents relative to the previous day's close, so not that bad, but closing on that day at a price of $4.58.5. We are now up on the day, just under 1% so far, but we might be bumping into resistance overhead with the 382 from this yellow retracement here on the way up. And that is at a price of $4.63.8. That might be a significant level for us to be breaking above and closing above today. But what I see really as the next challenging level to be getting above is going to be the 618 from this white retracement to the downside, and that is at a price of $4.72.2. So it would be great if we could close the week above $4.73, but if not, closing above $4.64 would be good too. But, with that being said, and the high of yesterday, February 29th, being $4.81, that does seem to also correspond with this other level here, the 236 from the retracement on the way up, being at a price of $4.81.4. And so really, if we want to be breaking higher, we need to be seeing closes above these highs, suggesting that buyers are still stepping in, even though price is going higher. And so we want to see a close, whether that's today or on Monday next week. We want to see a close above $4.82, potentially getting to this level here, $4.85, which corresponds to the gap on the way down, which has since been filled. But, I just think that's going to be a psychological level. Also, there's probably going to be a lot of resistance there because you have people buying in this region, expecting price to go up, and then it drops. And then they're left thinking, this was a bad decision. I got to get out of my position. They're given a chance to exit here that's short-lived, just over 3 days, and then price goes back down. They're thinking the next chance I get to sell at break even, I'm going to. So if we do get back up to this blue line at $4.85, we might see some resistance. And we can also see that reflected somewhat in the volume profile here with this little blip sticking out corresponding to the consolidation here. There are going to be sellers at that level. So if we can get to 485 and hold, I think that would be great. And also looking at the fib levels here, the 786 at $4.88.8. That is going to be another one for us to close above. But what I could see moving forward is that $4.15, I think that's in the rear view mirror. I think that we're finding support at higher levels, and I think the best chance to buy on a dip would probably be another revisit to $4.35. We do have this white uptrending level that is going higher as time moves on. So I think if price does dip, it might just be going to maybe $4.40, a wick down, maybe to $4.35, $34, somewhere around there. But I don't think that we're going to be seeing another revisit of 411 or 415 just because we're making these higher lows. And so I do think that we will be, testing 488.8, 450 as support as we are now. It's quite possible on Monday next week we do get another leg up and we say goodbye to 450 to be then testing 460 as support as we are testing 472 and higher, 481 as resistance, breaking above those levels, moving higher. And I do think that in the coming weeks, we will be back at $5.10, ideally getting a close above that level. And what I'm seeing in the stock price, the trading over the course of this week suggests a lot of strength, although I should caution, as I had mentioned before, it is quite possible this consolidation is a bear flag that could break to the downside. But since we are not seeing lower closes, we're actually seeing the low close from yesterday on the red day actually being up, over the course of the week. So I do feel like this will be moving higher, but as always, do caution to the downside. Be ready if it does dip to 415 or 411, that could be a great dip buying opportunity, but it could also go down further to $4 a share. So good to have a plan for that if it does happen. But if it doesn't happen, good to not FOMO in when we're breaking above or testing these previous highs, like at $5.10. You don't want to buy into resistance. You want to buy at support and trim at resistance or just hold through it, depending on how you want to play it. But right now, it does look like support is right around $4.50. Maybe we get a wick below like we saw here, testing that level of support coming down to the next one. So here, a wick below testing this level might be dipping down to $4.35, but wicking back up to close that candle above 450. So do look for that. I think there's just a lot of upside for it. I'm excited about it, and I've been enjoying watching the stock, making these videos for you guys. And, as always, these are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this and coverage of Rocket Lab. Thanks a lot for watching.